Hello everyone, and welcome back to Explain the Charts. Today, August 15th, 2025, we're doing a deep dive into Meta Platforms, ticker symbol Meta, which has been making headlines with its recent performance. The buzz around Meta is undeniable, especially following its strong Q2 earnings report, which has sent shares surging and bringing the company closer to a staggering $2 trillion market capitalization. Analysts are overwhelmingly optimistic, raising price targets, primarily driven by robust advertising revenue, increased user engagement, and, critically, Meta's aggressive investments and partnerships in the booming AI sector. New features like Instagram's repost function and collaborations with AI startups such as Pika and Higfield are fueling this growth narrative. However, it's not all smooth sailing. There are cautionary notes about substantial capital expenditure on AI, which could weigh on future profitability. Regulatory scrutiny also looms large, with potential antitrust charges in the EU and ongoing review of its AI policies by U.S. senators, alongside existing lawsuits. Now, let's turn our attention to the charts to see how these fundamental developments are translating into price action. Looking at the daily chart, the overall trend for Meta has been unequivocally bullish over the past several months. The stock has shown remarkable resilience and a consistent upward trajectory, with dips often being quickly bought up. Let's zoom into the period around late July and early August 2025, specifically the Q2 earnings announcement. Observe the massive bullish gap up from July 30th's close of 695.21 to July 31 ST's open of 775.2. This single candle perfectly encapsulates the market's overwhelmingly positive reaction to the Q2 results, propelling the stock almost 11% higher in one session. This signifies a significant reversal from the slight downturn seen earlier in July, establishing a new, higher support level. Before this, the $680 to $690 range acted as a strong support, as seen in the candles from late June and early July, providing a springboard for this explosive move. The high volume accompanying this gap up further reinforces the conviction behind the move, indicating strong institutional buying interest. Post-earnings, Meta has consolidated, but largely maintained these higher levels, with recent price action testing and briefly surpassing the $790 mark. The $750 level appears to be acting as a strong immediate support zone, a level that was the approximate low point after the initial earnings surge. On the upside, the recent all-time high around 795.46 from August 13th serves as the immediate resistance level. A sustained break above this could open the doors for Meta to push into the uncharted territory above $800, potentially accelerating its journey towards that $2 trillion valuation. Now, shifting our focus to the one-hour chart, we can gain a more granular perspective on the recent price action and potential short-term movements. After the dramatic gap up on July 31st, seen as the spike from 695 to 775, Meta entered a consolidation phase, trading within a broad range. We can clearly identify horizontal support around $745 to $750 and resistance near $780 to $785 for much of early August. Notice the high-volume spikes during major price movements, especially on July 30th around 2000 hours Universal Time Coordinated and July 31st around 1300 hours Universal Time Coordinated, confirming strong directional conviction. The dips below 750, such as on August 1st, were quickly bought up, showing persistent demand at these lower price levels. This indicates that the market is currently digesting the recent gains, with bulls actively defending critical support levels, aligning with the analyst optimism we discussed. The current resistance at 790, seen on the daily, manifests as several smaller rejections on this hourly time frame. Short-term traders should pay close attention to the $780 psychological level, as sustained trading above it could indicate continued bullish momentum towards the all-time high. Conversely, a break below $770 could signal a deeper pullback to the $750 support, potentially driven by profit-taking or concerns over Meta's high capex. Moving to the 15-minute chart provides an even closer look at intraday trading opportunities and microtrends. Over the past few days, Meta has been consolidating near its recent highs, oscillating between approximately $775 and $790. On August 12th, we saw a significant surge, breaking above the 780 resistance earlier in the trading day, indicating strong short-term bullish sentiment. This was followed by some profit-taking, but the stock found strong support around the $778 to $780 zone. This pattern suggests that $780 has transitioned from resistance to a crucial short-term support level. The relatively lower volumes during recent intraday pullbacks, compared to the surges, suggest that sellers are not aggressively pushing prices down, indicating healthy consolidation. For short-term trading, if Meta can hold above $780 on the 15-minute chart, it presents a potential long entry with targets towards $790 and ultimately the all-time high. Conversely, a decisive break and close below $778, especially on increased volume, could signal a short opportunity with targets towards the $770 to $772 area. Watch for volume spikes on attempts to break new highs or lows, as they provide strong confirmation of the validity of the move. The news about Meta's high spending and regulatory issues could serve as triggers for any sudden downward movements, so staying informed is crucial for traders on this time frame. Let's consolidate our thoughts on Meta's current position and future outlook. In the short term, Meta is bullish, driven by the post-Q2 earnings momentum and strong market sentiment around its AI initiatives. The critical immediate support to watch is the $780 level, followed by the stronger $750 area. On the upside, the all-time high of $795.46 is the primary resistance. A breakout above $795, likely fueled by continued positive AI news or favorable regulatory updates, has a 65 to 70% likelihood in the short term, opening the path to $800 to $820. However, a failure to hold $780, potentially triggered by negative news regarding AI spending or EU antitrust developments, could see a retracement to $750, which has a 30 to 35% likelihood. In the long term, the outlook remains cautiously bullish, primarily due to Meta's aggressive investment in AI and its market positioning. For traders, consider opening long positions on retests of key support levels like $780 or on a confirmed breakout above $795 with strong volume. For bearish plays, look for a sustained break below $778 or a rejection from the all-time high resistance, especially if accompanied by high selling volume. Keep a close eye on any further news regarding Meta's capex figures and regulatory announcements, as these will significantly influence price action. The market will also be watching for updates on Meta's AI product development and monetization strategies to justify the heavy investments. Thanks for tuning in to Explain the Charts, and remember to always do your own research before making any trading decisions.